Welcome to this video day, which is our weekly forex forecast. It is Monday, it is the 27th of April, it's 9:30 GMT. Just a general overview of the markets. If you want our daily charts analysis on the pairs discussed, simply click on the link beneath this video. Now, the major event of the week is going to be FOMC on Wednesday, and I'm going to discuss the likely impact of that later in the video. But first of all, let's take a look at some major pairs and levels. Let's take a look at Euro USD. We remain out and out bearish of the euro. We've been trading it short since 127. Our target is par on the downside. Now, in terms of coming in this week, we're actually flat euro USD, out on stop for a profit last week at 108.50. Now, where are we going to get back in? Now, my own view is there's two key levels to look out for. There's 110 on the upside. I think the euro possibly could bounce up to that level. If it does, we'll be sellers on any momentum weakness. Key level of support is 108 and the 20-day moving average below that. We take out 108, I think we'll be going down to recent chart lows pretty quickly. Now, in terms of the euro, it held up very well last week. Why did it hold up so well? Well, in my view, the market has been very, very long dollars across the board. We saw some easing of dollar longs. And if you look at the euro USD on the CFDC net traders, there is a massive euro short position. And I think, we've seen weak speculators taken out on stop. I also think that equity buying from overseas also supported the euro. Big influx of money. Now, the big fundamentals longer term, though, are out and out euro bearish. Obviously, yields in the zone. Okay, equities can draw some money in, but it's the bond markets that are really significant. Yields are very low, near historical lows. That will see money naturally flow out of the zone. Obviously, we're nowhere near a time where the ECB are even going to consider raising interest rates as they carry on with their monetary easing. So I see the euro going down. Now, also, I think the big fundamental in the short term for the euro is obviously Greece. We had the rumble in Riga, as one of the news wires called it last week, where Greece got some serious flack from Eurozone finance ministers about not taking the issue of getting money from them seriously, not putting in concrete proposals. Now, we've got to find a solution to this very, very quickly. Greece is actually running out of money. State bodies have been told to give all their excess funds back to the Bank of Greece to pay bills. So you can see how tight money is in Greece. Now, no one wants Greece to default, but I think unless both sides can find common ground, and we're nowhere near at the moment, Greece could default by accident. Now, what will be the impact of a default by Greece? Well, no one really knows. But if you look back to 2008, we had a bank collapse, and that caused huge turmoil in financial markets. This time, it's a country. Now, I just hope they find a solution quickly. Otherwise, we could see turmoil in financial markets. So we're very bearish of the euro USD on the long-term fundamentals, and also that short-term variable of Greece. Euro is also a sell on most of the crosses. Any rallies, just look to sell the euro. Now, in terms of the Aussie dollar, we're in a channel at the moment. We're short at the moment, and we've got resistance really at 79, but we're not really doing much in the Australian dollar. I don't see it being quiet for too much longer. It's held up very well, but the big fundamentals for the Aussie are just out and out bearish. Governor Stevens of the RBA has already said they don't really want to cut interest rates due to the amount of household debt, but if they have to, they will. And they want that Aussie dollar down. They basically need to get that exchange rate more competitive to help exports outside of mining. Of course, the big fundamental for Australia is China. Now, China has been reporting data that is basically showing that the economy is slowing. And we are now reaching a stage with China where it could actually cause a real move from risk at any time. And I noted, last week we had, I think the company's name is Bodang Taiwanwei, which is a state-owned company, default on its debt. So that's a state-owned company defaulting on its debt. Now, that's the first time it's happened in history. The Chinese government has normally bailed out companies. It's not doing so this time. And we've got bubbles all over the place in China. I noted the Shanghai index last week saying it was just a frenzy of greed. It's continued this week, or last week, sorry. It's completely out of control. You've got people in China, no experience of investing at all, just piling money into this market. The margin levels in the Shanghai composite are the highest of any market in history. It's going to end, in our view. I just don't see China avoiding a hard landing. I know I keep stressing this point, but I think we're getting a lot closer now. Debt levels are frightening. Corporate debt is, I think, 14 trillion. That's the biggest in the world. Debt on GDP in China is near enough 300%. Now, Eurozone, just to give you a contrast, is 100%. Whatever happens in China, obviously we think it will have a hard landing. But there's no question the economy is slowing up. Power generation is at the lowest level since 2008, which just shows how much the economy is slowing up. So we think the Australian dollar, the big fundamentals just point to a big break to the downside. And if we take out recent chart lows, then I think we'll be quickly going down to 2008 lows at 65. Moving to the British pound. British pound was the currency that surprised me last week. It motored to the upside. I thought it was actually going to come down, come up to the 152 level. We've sold it up there, and we see the pound coming down, going back down to 146. Now, the pound rallied last week on a more optimistic outlook from the Bank of England, which leads traders to believe that interest rates might be going up this year. Rates, in our view, will not be going up. And you can see in the data how the consumer is struggling for money. You've still got that supermarket war on, and you've still got inflation at zero, which is historical lows. I just don't see how the Bank of England can raise rates yet. But just from a short-term perspective, up at 152, it's extremely overbought, and it's certainly worth a swing trade to the downside in our view. In terms of Canadian dollar, we really need to see a break above 122.30. We've been above that level once and come back through it. We need to get above that level again. If we do, I think we'll be going up to 124, which was where the bottom of that recent channel broke. If we can get above that, I think we're going back to 128. There's a lot of optimism about the price of oil. We don't share that optimism at all. We pointed out last week that everyone's saying that US shale production was down, but that was more than compensated by Saudi Arabia increasing production. We don't view also the problems in Yemen as any big deal in terms of disrupting the flow of oil at all. It's just it's an internal kind of how would I put it, conflict. They're not going to be attacking shipping. So we think the US dollar should be going up on the Canadian dollar, but we need to see strength above that 122 level. In terms of the Japanese yen, we've remained out and out bullish of the yen. And we've actually seen the dollar come off the 20-day moving average. It's holding support at the moment. But if support gives way, we think we'll be going down to 116. So it's a question of selling it on the rallies, the dollar, or selling it through support. There's big rumours on the news wires that, maybe the Bank of Japan might increase their monetary easing at the policy meeting coming up on Thursday. We don't see this happening at all. They're already doing enough. And, I think, the Japanese have been relatively optimistic as central bank about reaching their inflation target. Got a bit of wage growth going on. Exports are pretty healthy. So in the short term, no need for any more monetary easing. I see the yen going higher. Also, as I pointed out earlier on, markets like the Shanghai index out of control to the upside. If they break, like the Shanghai stock index breaks, then the yen will probably firm up on safe haven flows. And the Shanghai index is not the only index around that is just not reflecting fundamental fair value. You just can look at Europe's stock markets Obviously, over in the US, we hit a new high on the Nasdaq, above the dot-com bubble levels. It really is a situation now where the equity markets in the world are just not reflecting fundamentals. Now, everyone has their own view of when they might crash. I don't have an actual view of when it might happen, but when you get valuations so high, I'm pretty weary. Also, the yen. That can firm up on the problems in Greece if they get out of control as well. So safe haven buying in the yen could really propel it higher. We remain friendly towards the yen on just about every major currency. Now, like we did speak last week about selling commodity currencies on the yen. They worked out quite well. Actually, one currency I didn't mention was the New Zealand dollar. That broke finally heavily to the downside, and I think we got more potential. The central bank quashed the idea that interest rates could be going up. They were never going up, but the market perception was that they would. The problems in China will also reflect on New Zealand. Now, in terms of other currencies, I'd be friendly to the dollar on just about every major apart from the yen at the moment. And there's several currencies where the dollar has become oversold. One would be the Singapore dollar, for example. Check that out. But if you look across the emerging markets, I think the dollar now is a buy on strength. On the European currencies, the one that interests me outside of, obviously the pound and the euro would be the Norwegian krona, USD NOK. Look at where it is now. I think any strength to the upside there is a buy. So just basically, bullish the dollar on everything but the yen. Now we do have FOMC coming up on Wednesday. So, what are they going to say? Are we going to get any clues to when interest rates might go up? My own view is we won't get any clues as per usual. It will just be the same old. The data will dictate what the Fed do. Will they switch their language due to the recent softer data? I don't think that they will. A lot of that data underscored was impacted by Q1, where we had that severe weather impact in much of the US. Now we're in Q2, things will pick up. If you look at the real three areas that the Fed will be focused on, they are employment. Unemployment has come down nicely for the Fed. Also, consumer confidence. Consumer is 70% of the US economy. Consumer confidence is good at the moment. I see it improving. Also, inflationary pressure. We're starting to see a little bit of inflation come in. That was above forecast on the CPI. And I think, the Fed, cannot hold off, interest rate hikes into next year. Our own view is they'll probably want to get it out of the way by mid-year if they can, get a small rate hike in, not to shock the market too much, and then just say they'll do it gradually. But there's no question that the major central banks, of all of them, it is the Fed that is going to be putting up rates first. And I think last week the dollar did ease across the board, but that is just basically an unwinding of dollar longs, over leveraged longs really. And if you look at the CFTC net traders positions, dollar longs are at their lowest now since September last year, which means that the dollar is no longer overbought, and we see it moving to the upside. It's a buy on strength in our view. Now, what I'll probably do is, obviously we've got the Fed on Wednesday. I'll probably come back and do another report then. I don't see too much action before the Fed, although obviously the markets can surprise us at any time. But after the Fed, I think we could see a big reaction in the market. So we'll take a look at that. So I'll come back on Wednesday and do a report. But that's the weekly forecast for now. Thank you very much for watching me as per usual. Take care. Have a good week.